Hey everyone, welcome back to Corporate Decoder, where we help you understand the complex world of business filings. Today we're diving into SemLEDs Corporation's latest report, and let me tell you, it has got some interesting twists and turns, especially when it comes to their outstanding loans. Get ready for a deep dive into how a company manages its debts and what that can mean for its future. Before we start, if you love getting straightforward insights from financial documents without all the corporate jargon, make sure you are subscribed. And hey, we've built a fantastic community on Discord where we break down these filings even further. Link is in the description below. So, what is this report all about? Basically, SemLEDs is telling us about some important agreements they've made. It's like an update on their financial health and significant deals. The main story here revolves around some loan agreements and how they've been extended and modified over time. They are reporting this because it is a big deal for the company, and the rules say they have to tell their investors about it. This form is a way for companies to keep everyone in the loop about important events. Now, SemLEDs is a company that deals with common stock, the kind you typically buy and sell on the stock market. Their stock trades under the ticker symbol LEDs on the Nasdaq stock market, which is a pretty well-known exchange. Let's get into the meat of it. Back in January of 2019, SemLEDs got into some loan agreements. Think of these as borrowing money, but with specific conditions and collateral. They borrowed money from two main sources, Trung Don, who is actually the company's chairman and CEO, a bit of an insider deal here, and also from JR Simplot Company, which was their biggest shareholder at the time. The total amount borrowed was pretty significant, over $3 million in total, with an annual interest rate of 8%. That 8% is key because it tells us the cost of borrowing that money. To make sure they would pay the money back, these loans were secured. What does that mean? It means that if SemLEDs couldn't pay back the loans, the lenders could take a specific asset to get their money back. In this case, the loans were secured by a second claim on the company's headquarters building. So, if things went really south, the lenders could have a claim on that building. Now, loan agreements have a maturity date, which is when the loan is supposed to be fully paid back. What we see here is that SemLEDs didn't pay these loans back by their original due dates. Instead, they extended them multiple times. They extended them in January 2021 to January 2022. And then again in January 2022 to January 2023. The interest rate and other terms stayed the same, meaning they were still paying 8% interest and the security on the building remained. This pattern of extensions often suggests a company might be having trouble generating enough cash to pay off the debt, or they are strategically choosing to keep the debt for longer. Fast forward to 2024 and trees a change in who holds one of the loans. JR Simplot Company decided to transfer its rights for one of these loans to a different entity called Simplot Taiwan Incorporated. This doesn't necessarily mean the terms changed, but it is important to know who the lender is, as it can affect future negotiations or the company's relationships. Around the same time, in January 2024, SemLEDs entered into a fourth amendment. For these loan agreements, amendments are essentially changes to the original agreement with Simplot Taiwan Inc. The maturity date was pushed forward to the 15th of January 2025. But here is an interesting part. They also agreed that SemLEDs could repay some of the loan up to $400,000 by issuing shares of its own stock. The price for these shares would be based on the stock's closing price right before the payment notice. This is a way for companies to manage cash flow by using stock instead of cash, especially if cash is tight. The loan with Trung Don also had its maturity date extended to the 15th of January 2025 with the same interest rate. Just a little over a month later, in February 2024, they made another change, this time with Trung Don. This fifth amendment allowed SemLEDs to repay up to $800,000 of the loan principal by issuing company stock, and they actually did it. They used 629,921 shares, valued at $1.27 per share, to pay off $800,000 of the loan principal. This shows they were actively using stock to reduce their debt. Then in July of 2024, another amendment, the sixth amendment, was made with Trung Don. Again, this allowed SemLEDs to use its stock to repay part of the loan. This flexibility to use stock instead of cash is a pretty common strategy for companies that want to conserve cash. Getting closer to the present, in January 2025, they made further extensions. The loans with both Trung Don and Simplot Taiwan Inc. were extended again, this time to the 15th of January 2026. So we're seeing a pattern of rolling over these debts. Then, at the end of February 2025, SemLEDs and Simplot Taiwan Inc. entered into what they call the Sixth Amendment to the loan agreement. This one is particularly interesting because it allows SemLEDs to pay back up to $1,200,000 using their company stock. This is a significant amount and further emphasizes their reliance on stock issuance for debt repayment. And here we are on the 15th of January 2026, the latest reporting date in this document. SemLEDs has entered into new amendments with both Simplot Taiwan Inc. and Trung Don for Simplot Taiwan Inc. to raise the 7th Amendment. and they've capitalized all outstanding and unpaid interest into the principal balance. This means the interest that was owed is now added to the total amount they owe. The unpaid interest here was over $364,000, so the new principal balance is around $665,000. This amount was then used to extend the maturity date to the 15th of January 2027. Similarly, the loan with Trungdorn also had its maturity date extended to the 15th of January 2027 through what's called the 8th Amendment. All other terms and conditions for both loans remained the same, meaning the 8% interest rate is still in play. It appears they are continuing to extend these loan maturities rather than paying them off. Now, these descriptions are just summaries. For the full detailed picture, we'd have to look at the actual legal documents which are attached as exhibits to this report. These are the official contracts that lay out all the specifics. Looking at the exhibits, we can see the actual amendment documents, like the 7th Amendment to the loan agreement with Simplot Taiwan Inc. and the 8th Amendment to the loan agreement with Trungdon. These are the official records of these new debt arrangements. And to wrap things up, the report is signed off by Christopher Lee, the Chief Financial Officer. This is standard practice to show that the company's financial leadership is certifying the accuracy of this report. So what is the big picture here? SemLEDs has been continuously extending its loan maturities for years, borrowing from insiders and major shareholders. The trend of using stock to repay debt, especially significant portions of it, suggests that the company might be facing cash flow challenges or strategically choosing to preserve cash. While extending debt can provide flexibility, it also means the company is carrying debt for longer periods, and with an 8% interest rate that adds up capitalizing interest, as seen with Simplot Taiwan Inc., increases the principal amount owed, creating a larger debt burden over time. The key risks here involve the company's ability to generate enough cash in the future to eventually pay off these consolidated debts, or if they will continue to rely on stock issuances, potentially diluting existing shareholders. The company's reliance on these specific lenders, especially its CEO, also raises questions about its financial independence and potential conflicts of interest. For investors, this pattern of extensions and stock-based repayments is definitely something to watch closely. It signals potential financial pressures and a strategy that prioritizes immediate cash preservation over debt reduction. Ultimately, SemLEDs seems to be navigating its financial obligations by negotiating extensions and leveraging its stock, but the long-term sustainability of this approach remains an open question. Alright, that is our breakdown of SemLEDs Corporation's latest filing. What is your take on these loan amendments and what they signal for the company's strategy? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out. And subscribe for more deep dives into corporate documents. And don't forget to join the conversation on our Discord community. The link is in the description. Thanks for watching, and we'll see you in the next one.